Hey everyone, welcome to your daily update for SOL and BTC. I was thinking of not doing a video today. I had a very late night last night with some friends, and certainly my hangover has a hangover. But here we go. We'll keep it quick because there is only a 1 day and a 17-day close today, which in 15 minutes. So liquidity is stacked to the upside, but we have structural moves that are basically pushing the price down. So even though these heat maps or liquidation maps definitely look like the price should be skyrocketing and going to the upside, the structure at the moment is still actually pushing down. So I wouldn't take too much into this other than to say there will be a bounce. It's just maybe not today. Looking at the 7-day, then you can see there is still incentive to come down here to these 170s. The 19-day short that kicked in yesterday or the day before has a target of about 170. There's a lot of support that sort of is making that hard to get to at this stage, but there'll be a catalyst, there'll be some tweet, there'll be something, and then it'll probably go down and tag that area and take that block of liquidity. Once we head into those 170s, we then hit some bigger time frame longs, which actually they've already started. There was a dip down, and then there was like this. If you look on the low time frame, there was a sudden spike up last night, which was when we sort of first tapped into the higher time frame support. But price can sort of hang around in those levels for quite a while and accumulate or distribute, or basically the positions get built and then they start to act. So you don't. It's not very natural to just to tap a high time frame level and then just fly off to the moon. So yeah, we did have those low time frame signs last night that we actually have hit those levels, and there are further ones that are down more towards about 175. So that's probably going to happen. No guarantees. If everybody suddenly starts shorting and the incentive is just to go up, then that's how markets work. If we look at the 30-day liquidity, same thing. You really should be expecting these 170s to get taken on SOL, and then after that, yes, maybe it pushes to the upside. There's a trend that we may hit as well. Once we just go down a little bit more, and once we hit the trend, there's a hold level to the top side for it, which is about 212. So at some point there'll probably be some kind of move that kicks in once we just go down a little bit more, which then sends us back up a wee bit. But and BTC, if they were to go down and target that sort of 104, 105 area again, it's still a higher high than sorry, a higher low than where it went to on that previous wick. But yeah, going down to those sort of levels, there is actually support down there, but it's there is also support where we are now, and I think the key thing is that you want to bounce off it, and you don't want to spend time on it or under it, because the more time you spend down at the lower prices, the more resistance structure actually forms above. So it is looking pretty bearish, but we've all seen how fast this stuff can change. Okay, so SOLBTC Strength on the daily. So it's still in the downtrend. Really, you sort of need this to come down into this whole candle down here at about 16707, and then it has to try and use that whole candle to actually move sideways and break the trend. You can't generally reverse without some kind of horizontal level to actually support the price sideways to break the trend. So where it is now, it's pretty much just dangling below. You may see that go back up and test the backside of the trend, and then push down again, or it may just open the next candle and go down. But it's area of interest for any form of strength reversal is pretty much 16707. Before that, you wouldn't expect miracles. If we have a look at safety assets, so yeah, pushing up against the, what is that? That is an origin level. So pushing up against that 66.72 origin level, As long as it stays under that, then there is a chance of breaking this uptrend. But once it gets over that, then you'd expect it to shift up another level. So yeah, really it's just, do we end up getting a daily close over that 66.72 or do we not? And the other side of this would be if it rejects down, it's probably going to come back down to about that 66.1 area. It has hard closed this lower level now, so pretty much we are in this kind of sideways range until one side breaks. It's either going to break the top or it's going to break the trend in the bottom, but yeah, until one side breaks, it's basically stuck in, it's not a very big range either. It's sort of 65.94 through to about 66.72. Okay, let's have a look at these totals. So we hit the daily hold level and the trend will shift today. As long as that wick stays like that for the next 6 minutes, then we're going to have a trend that we can actually bounce off. And it's actually going to be a range trend as well because it's the first candle entering and closing into the hold. So, um, this is mildly bullish of a reversal, and but it's also a little bearish at the same time. So the main support level for that upper range was here at 1.52. And this will be another hard close under the range. So we had that there, we went back up, we took the liquidity above it, we created the hold level, we created a downtrend, and we started heading down. The hold level that is here can break a downtrend, so it's kind of what they're designed to attempt or do. Shifting the trend to the bottom side would allow it to bounce, and there isn't really a untested hold level anymore, so it could come back up, test the backside of the relocated trend, but it did sort of tap that already, and it could come up, test these range trends up high here. So there is potential for that to actually be moving back up. The bearish outcome of this is, of course, that it is now the second hard close under that upper range. So the rejection of the underside of that range could send us down lower and target this 1 point, what level is that? This 1.38 level, which is now a support level, which means breaking that break level at 1.42. But structurally, this is in a place where it could reverse. It's doing all the right things to make that happen. So let's have a look at this from DXY perspective. Yeah, so versus the value of the dollar, though, that's not an ideal place to be closing. So we've been down like this before, and as you can see, it actually sent us to an all-time high at the time. Whether this does the same thing, it's hard to say, but the trend will flip down, so we're going to end up with something like a reverse trend, and it may just get stuck in a bit of chop, and bounce between the trend and the underside of the break there, which just basically is like compression, just more compression. The other option, of course, is that with the trend being clear and not there at the upside anymore, it could try to bounce back up through all that. But there's so many support levels down here that can flip to resistance. Spending a day or 2 days even down here is bad. Like, you can just end up rejecting off the stuff and then traveling back to this prior range, which is definitely going to catch a lot of people by surprise. Okay, so here we've bounced off the range trend. Looks like the next candle is going to open just on the wrong side of the trend. So you'd expect that that's looking to try and reject further down, and it's under most of the older support levels. But levels like this one here at about 3.33, they can support that price. So it's just whether or not they manage to get up through that trend, which, as you can see, the downtrend is pretty solid, and we're far enough away from it that there is the ability for price to be moving up and down in here, and for there to be trades that you can have, longs and shorts as we bounce around in this overall area, but we can't break that trend today. So it would have to be one candle up to the trend, the next one open on the other side of it, clear of it, and then up. So as it stands, it still just looks like it's still going to be in a downtrend for a bit. Okay, let's have a quick look at these two closes on BTC. Okay. Yeah, so this is not a good place for price to be. So we're underneath the overall range trend, and although nothing is hard closed, the probability of this falling is very high, just simply because you'd have to really go up, you've got to break that interior downtrend, which would take minimum of 2 days. You've got to get back up into that range, which we're now looking to close in 30 seconds below. There is all of the horizontal support levels, etc. in here, and there is another range trend down here at 102. And then, of course, you're into that 98 area or lower. So, yeah, it does. Those targets that we do have down below 100, they can become a very quick reality if we start losing this upper range. So, yeah, keep an eye on that. But they'll also be a really good buying opportunity as well, because there will be bounces, if it goes down there. So there we go. We open below. So and all the alerts go off. So the absolute bearish view on this is that it's only going to, it really only just has to go up, touch that trend, or touch the underside of any of these ranges. Alerts, and then it can reject. The bullish side of it, though, is that there is plenty of support levels in here. So that the way that wick sort of went down through everything, it converted all of this into support. So we have got a very good chance of bouncing. But I think if we end up closing 1 day down here, that will be a hard close and a loss of that upper range. And we have already tested the range hold. So this candle down here, which that wick went down into, that's basically the main hold of that whole range. Yeah, so I guess we see how this closes. It may close down, and if it does for the day, then pretty much you can say bye-bye to that that range up there. And if it manages to close as an accumulation candle, then it'll be giving you a little bit of hope that it can get back up and in there. Let's see. Okay, so the 17-day. So when you zoom out to some of these higher time frames, it's still just an uptrend, as you can see, but 17-day uptrends don't become downtrends instantly. They become daily downtrends, and then daily downtrends become 2-day downtrends, and 2-day become, and so on and so forth. So so looking on the higher time frame, it still just looks like it's in an uptrend. If you were looking to buy the trend, you'd be looking at these levels about 103, 104, or the range trend down here at about 101. As long as it doesn't hit 98, it's still in this accumulation range. So it's basically just going sideways in that accumulation range. It has got what's that, 119, 811 is the top of the range, and it's still under the range trend. So this is kind of the first candle that's actually opened in a position where it could tap the range trend and reject. So that would mean the price going, it would probably do it pretty confident with that, but around that 109 to 110 area, it could head up, hit that trend, hit the backside of that break or the underside of that break, and then reject down. And likewise, any of these trends that are to the downside here, so this is like your 101 through to 104, that area there, any of those trends are going to try and come back and target this whole candle over here. So that's 111,700, and we didn't close under the wick, so that's a little bit more bullish than not, but yeah, the wick is about that 107,212 area. So so yeah, if it does have some kind of dip down into these trends, depending on the speed of the recovery, it would look to come back up to anywhere between 107 and 111,700. So there's probably going to be some kind of move in there. It could also go up first, reject, and go down. So that's, but as it stands, it's opened in a position where it's not, it hasn't got a trigger. So I think I spoke about this yesterday, but when you open a new candle like this, there's nothing here to say what way it goes first, but what there is here to say is that when it goes one way, we then know what it will do as far as where what happens with the move and going the other way. So that's how I set like limit orders on trades, and then go out and end up really hungover, but make profitable trades, because you know that, okay, once it goes here, it will go there, and that's basically the whole idea. But unfortunately, what you don't know is, does it go up first then down, or does it go down first then up? So this is what this is looking like right now. Is it needs to hit the trend, or it needs to hit the level, and then it will go down, or it needs to hit the trends, etc., at the bottom, and then it will bounce back up. But right now, it's just boring and sitting there. Okay, let's have a look at SOL. So that's not a great close, unfortunately. Why did it have to sneak down just below that level? I swear that they have a sense of humor. So it's created this new trend, which is both a range trend and a standard trend. So sometimes they are one and the same. This one's moved and gone, so I'll just get rid of that now. And it's possible it just ends up stuck in this little wedge and pretty much does nothing and just further compresses. But it's not hard, like this level isn't a hard close level, but it is an origin support level on the daily. So yeah, what is that going to do? So it could tap that level and then reject off it. It could just operate between the trend and the level and just stay here, or because it is not technically hard closed, it could just go straight back up. If it was to head back up, I think that would be your absolute earliest point of rejection, if it gets back up over that origin level. And and then of course you'd look to these 196 areas again, and then up to the trend and so on. So it's already rejected off the backside of that whole candle, which is what this candle is. So from a bullish perspective, it can definitely go back up from here. From a bearish perspective, it's not great to spend time underneath high time frame support levels, because they can flip to resistance, and they of course then can break trends, and we've already done one bounce off this this older down sloping range trend through here. In fact, we've actually done a couple of bounces. We did the first one here, and then we did this one here. So if we keep hitting that, eventually that'll break as well. So I don't know, that it's a bit of a funny place to have closed for the daily. So you can see it's already starting to tap, tap, tap that level. So it might just push back down a little bit towards that trend. Or like I say, it may go down even further, because that is a pretty bad place to be closing. Okay. And the 17-day is much like BTC. It's just it's opened the candle in a point where there's no trigger. So you could either see it come down to this range trend, which is going to be about that what level's that? About that 180, 181. The other side of it would be to come back up and potentially test the backside of these trends, which aren't broken yet. So that's about that 195 area. And the wick of the whole candle being the earliest point, it's about 193.6. And it could just, so this type of resistance is just called inverse resistance, which is basically just the wick of the prior candle of the same type, or the wick of a candle historically of the same type, and that's about 190.7. So if you were looking to take a really conservative scalp on this, if it bounces off one of these trends, you just take it to the first inverse, which is just that 190.7, and just claim a few dollar move. But anything past there could technically then reject. But it's got to trigger first. So sometimes in situations like this, I would just open a smaller swing position, because you know it's either going to go down and then up, or it's just going to go up and then reject. So you just open a small position which just takes the first resistance, and then it goes up, rejects, you've made your trade for the day anyway, and then you don't have to wait for it to go down. And you can take a second trade if you want to. Okay, so that's SOL. Let's have a look at, let's just have a quick look at Tesla again. Oh, yeah. So yeah, Tesla basically closed up over one of the trends, under the other one, tested that, rejected, found support. So it still hasn't lost the range. Still looking pretty strong. Being back down underneath that trend again is not ideal. You know, it would be better if that had stayed up above that trend, but it's yeah, it hasn't lost this top accumulation range until you get a hard close of a blue candle underneath that level, which is 433.12. So yeah, if that's when you'd start to consider that this thing's gonna take a bit more of a dump, but as it currently stands, it's still holding on, and the downtrend that it's in is pretty flat downtrend, so still showing some decent strength. Okay, yep, that's us. Sorry, not a huge, awesome, energetic video today, but this is what the after effects are. I'm also off to a bachelor party thing, which is a whole day event tomorrow, so I won't be able to do any form of update tomorrow. That will be my first day off since starting this, which is kind of cool. Have a day off, and we'll catch you again next time.